Today, former FTX executive Ryan Salem is sentenced to 7.5 years in prison. Bitcoin miner Riot Platforms is pursuing a takeover of its rival Bitfarms. And Sergey Nazarov, co-founder of Chainlink Labs, discusses real-world asset tokenization, as well as financial and political advancements in crypto. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies in the red after the Memorial Day holiday. As of noon Eastern, Bitcoin fell nearly 3% to the $68,000 level. Now, that's after trading above $70,000 just yesterday. Ether slipped more than 2.5% to the $3,800 level on the heels of the SEC approving a rule change late last week, which would allow for the creation of spot ETH ETFs. Analysts are optimistic Wall Street will take up these products. Solana also dropped today, falling more than 1.5% to $168. Bitcoin's move lower this morning comes after CoinDesk reported that defunct crypto exchange Mt. Gox transferred $9 billion worth of Bitcoin to a single address as a possible part of its repayment plans. Mt. Gox, which was once the world's largest Bitcoin trading exchange, went bankrupt back in 2014 after a massive hacking which led to hundreds of thousands of Bitcoin being stolen. Creditors of the Japan-based exchange are still waiting to get repaid billions of dollars worth of Bitcoin. The repayment deadline is now October 31st of 2024. Okay, let's talk about the top stories for today. Former FTX executive Ryan Salem was sentenced to 7.5 years in prison after pleading guilty to federal campaign finance and money transmitting crimes last year. The 30-year-old faced a maximum possible sentence of 10 years behind bars for those violations. During his plea, Salem admitted that from the fall of 2021 to November of 2022, he made tens of millions of dollars in political contributions in his own name, when actually the money came from Alameda Research, FTX's sister hedge fund. Salem said that those contributions were made at the behest of former FTX CEO Sam Bankman-Fried. SBF was sentenced to 25 years behind bars back in March. He filed to appeal that sentence. On top of the prison time, Salem was ordered to pay more than $6 million in forfeiture and more than $5 million in restitution. In a statement today, U.S. Attorney Damian Williams said that Salem's illegal actions helped FTX grow faster and larger, and that his involvement in two serious federal crimes undermined public trust in American elections, as well as the integrity of the financial system. He went on to say that today's sentence, quote, underscores the substantial consequences for such offenses. Next, Riot Platforms is pursuing a takeover of its rival Bitfarms, proposing an acquisition of the Bitcoin miner for $2.30 a share. Riot CEO Jason Les posted on X this morning, writing that Riot had accumulated a 9.25% stake in Bitfarms and made a proposal to its board of directors to acquire the company. Les said the move would create the world's largest publicly traded Bitcoin miner. He went on to write that Riot's proposal was rejected by Bitfarms' board without any serious engagement or dialogue. We reached out to Bitfarms but didn't hear back right away. As of noon Eastern, both Riot and Bitfarms shares were up, with Bitfarms rising more than 10%. Last, American voters increasingly want to support a political candidate who is knowledgeable about crypto. That's according to a Harris poll in partnership with Grayscale Investments. The survey found that more than half of the 1,700 people polled between April 30th and May 2nd are more likely to vote for a candidate who is informed about crypto compared to one who is not. The poll also shows that the vast majority of respondents, 77%, think U.S. presidential candidates should have an informed perspective on crypto and other innovative technologies. Those surveyed are evenly split on which political party is in the lead when it comes to crypto policies and regulation. Nearly half think some of their future investment portfolio will include digital assets, and 28% say that the approval of spot Bitcoin ETFs in the US has made them more interested in investing in Bitcoin or crypto assets in general. All right, for our main story, the Depository Trust and Clearing Corporation, or DTCC, which is the world's largest securities depository, and Chainlink, a platform connecting existing financial systems to blockchains, collaborated with some of the world's biggest financial institutions on a smart nav pilot, which brings net asset value data on-chain. Crypto World's Talia Kaplan sat down with Sergey Nazarov, co-founder of Chainlink Labs, to discuss the collaboration just before he headed to Austin, Texas, for one of the biggest crypto conferences in the world, Consensus 2024.
DTCC, Chainlink, and 10 major financial institutions, including JP Morgan and Franklin Templeton, collaborated on a pilot program for institutions to bring price and rate data to blockchains, specifically NAV data. So can you take us through how this collaboration all works and what exactly was the goal of this collaboration?
So I think this collaboration shows the trend towards fund tokenization, because this data is a critical part of administering a fund on chain. And so it shows that all of these large institutions, including and the DTCC as well, are going in this direction of basically putting more and more parts of a fund on chain. And that is a very important trend because the on-chain format for funds is a superior format in many ways. One way is that it conveys a lot more information to investors. Another way is that it's much more efficient, and therefore the costs of operating funds go down. But generally what this is largely about is going down a path of fund tokenization and kind of doing that in an incremental way where you're putting different parts of the fund on chain. In this case, it was certain key pieces of data, but I think we'll go to subsequent stages that lead to kind of wide-scale, large-scale fund tokenization.
Now, you touched on this, but DTCC released a report this month highlighting some of the benefits, which you mentioned, but some include real-time, more automated data dissemination and built-in access to historical data. What else stood out to you in the report, and how is this different than how the current financial system works?
So in the current financial system, all of that data needs to be emailed across many different groups, and the data only becomes available after days or weeks or months. Here, the data can be in an automated way generated by calculating it pretty much on the spot, and so it can be made available every minute rather than every week or every month, and that's pretty significant when you think about this as valuation data that tells you the value of what you're buying or selling. And then the second thing that's pretty significant is the ability to move all of this data and all of these assets across different chains. So there was a dimension here where the data can also go across different chains through CCIP, the cross-chain interoperability protocol that we work on at Chainlink. And the ability to move this data across chains is very important because all the banks, all the asset managers are basically in the process of launching their own chains. And they're going to want to use tokens and consume data from their own chain environment. But all those different chain environments need to be reliably connected. So that's one of the big things that we also work on.
So what does this collaboration signal to you? Perhaps that there's more mainstream institutional interest in real-world asset tokenization?
Yeah, there was a very large number of big funds in this kind of tokenization and data transmission pilot here with the DTCC, some of the biggest institutions in the world. Many of them have now production chains that they use internally, like JP Morgan has a production chain that they use, and many of them are launching production chains. So I think the trend is clearly towards generating your own blockchain as a bank or an asset manager, putting assets and client accounts and forms of payment on that blockchain, and then exchanging that form of payment or client account money or stablecoin money for different assets on various chains. So basically the world that we're actively now living in, not even going to, but living in, is that all these different institutions are going to have their own chains. They're going to connect those chains, and they're going to execute transactions across those chains. And that's going to depend on the data within those transactions, and it's going to depend on the connection between those chains making the transaction possible, which are both things that Chainlink is heavily involved in across both the public chain DeFi world, where Chainlink is the standard already and powers over 60% of DeFi, and where we are now becoming the standard in the capital markets through work like this.
Now in March, BlackRock, the world's largest asset manager, entered the asset tokenization race by creating a new fund on the Ethereum network. So what does that signal to you?
That signals to me that the largest financial institutions see a market in the crypto industry. So the crypto industry, in my opinion, when it crossed 200 billion, got on an inescapable, inevitable trajectory to be a large global market that would continue to grow. It's now at over 2.5 trillion in value, and I personally think it could get to 10 trillion on the basis of consumer and retail and hedge fund demand. And I think that market is what large institutions like BlackRock are interested in with the BITO product. The remaining growth beyond 10 trillion for the crypto industry and the blockchain industry, I think will have to happen through all the value that's locked in traditional financial institutions. And that's where that process of them generating their own chain, putting those assets on chain, will take the crypto industry way past 10 trillion into the hundreds of trillions. So we're still kind of in the early to mid stage of the industry's development, but even at 2.5 trillion, it's big enough to justify the largest asset managers investing resources and building financial products for that market. So I think they're interested in that market, which is a very good sign because that market still has, I think, multiples of growth left.
I want to touch on this because it just recently happened, but the House passed a crypto market structure bill, the Fit for the 21st Century Act. What was your reaction to that, and what do you want to see happen with that bill?
Yeah, so my reaction to that was very positive in a few ways. I think the first thing was the bipartisanship between Republicans and Democrats on this topic, which is not as common. It hasn't been historically as common around our industry. So I think it shows a big shift in the interest level of both parties to move forward cryptocurrency regulation and create clarity about this critical part of the economy that they clearly now see as an important part of the economy because they're discussing it, they're making a bill, they're moving it forward. So I think the bipartisanship around this bill is very, very strong and positive and unique and shows a kind of very big directional shift in terms of how U.S. legislatures approach cryptocurrencies generally. I think it's generally a very good piece of legislation because it seeks to create clarity about what agency is responsible for what type of asset. And it seeks to define the difference between a commodity and a security and what the CFTC's role would be versus the SEC's role, which is a big piece of the clarity that's necessary for more real-world assets, for more tokenized forms of payment to come into existence. So generally, I think it's creating a lot of valuable clarity in and of itself. And I hope it continues to the Senate and then it gets through the whole legislative process. But the fact that you actually have Republicans and Democrats in such a very charged kind of moment in time politically coming together on this topic, I think signals the importance of the blockchain industry, cryptocurrencies, blockchain technology generally, as something that has now reached a different level of importance for the U.S. economy.
Nazarov also discussed crypto ETFs and how the approval of the products in the US changed crypto sentiment. You can check out the full interview over at cnbc.com/cryptoworld. Okay, that's all for today. Consensus 2024 kicks off tomorrow. We'll be back again with coverage of the crypto conference. We'll see you then.